With a strong manufacturing number that came out on Monday and more economic data that's pointing towards a strengthening economy, I have today with me Pat Becker Jr. of Becker Capital Management. Pat, thanks so much for being here.
Nice to be here.
So, Pat, let's jump right to it. Do you think that this better than expected manufacturing number, a lot of good economic data coming out, is actually going to hurt the S&P in the final month of 2013?
We don't think so. Part of it is the participation in this market from an investor level. A lot of people are just discovering the market again and coming back into it. You also have pension flows that have been increasing. So while you get these numbers on manufacturing and whatnot that indicate the economy is getting better, you also see some of the numbers from Black Friday on the retail sales side that are a little bit weaker. So it's a bifurcated economy. There's some areas like the stock market doing very well, the real estate's doing very well, but there's areas that aren't as well.
Right, and so of course when I say do you think it'll hurt the S&P, I am referring of course to the Fed possibly tapering sooner rather than later. But with this bifurcated economy that you're talking about, are there a couple names that you guys are looking at that you really like?
Yeah, we do. We like Plum Creek Timber, largest timber owner in the U.S., pays about a 4% dividend. It's one of those stocks that kind of got hurt earlier this year in May, July, August when interest rates went up. But it's a company that does well. Interest rates going higher means the economy is doing better. You've got more building activity typically when that happens. And lumber prices are really at a cyclical low. There's been a beetle kill in Canada, which has increased our market share on a worldwide basis. And so that's a name that we like for income, but also like for growth as well.
And who else are you looking at?
We like Howard Hughes. It is a unknown company for the most. You think Howard Hughes, you think satellites, you think the old GM, but it is a real estate company. They own Pier 17 here in New York. They're one of the largest landowners in Vegas, large landowner in Hawaii, and they're redeveloping those products. It trades about 2 times book value. Most of the home builders trade at 3 times book value, and so that delta, we think they've got a better collection of assets than most of the home builders, and so we think there's some nice upside there.
So Pat, before we let you go, we're coming up on the holiday shopping season, already started. Do you change your investment strategy at all at this time of year?
No, we're bottom-up, long-term investors. So when we look at companies, we're looking at the long term. So whether it's a Christmas season or not, we try to look at it through a full investment cycle, and that can be up to 5 years.
All right. Well, Pat Becker, thanks so much for being with us. We hope to have you back from the West Coast.
Thank you.
For The Street, I'm Joe Doe.